Okay, we are live for the Friday global macro update. Just closing my door. All right, so we're probably not going to wait really for the Friday. Usually there's less people who are active on the Friday. Usually people are done work and they just want to enjoy the Friday. But anyways, we still like to provide a video for you guys and girls for today. So let's get the recorder and let's discuss what happened within the stock market very quickly, and then we're going to dive right into the crypto market. So we're not really going to be talking about stocks a whole lot, but it is good to understand where we are within the S&P because it does give you some information. Oh, I don't know what I want to do there. Okay, let's just go to the recorder again. Okay. Let's close that. There we go. Okay, so that's setting up right now. We're going to get that going very, very shortly. And then we can get this... I do not want to restart. Oh, we'll just go with the live version. That's okay. Okay, well, welcome to the global macro and crypto market update. We're going to do a real quick analysis on the S&P because that is a very important risk on asset and index that we do like to look at. So we'll take a quick look at that. What happened for this upcoming week? Well, we did hit the all-time high that we had back in kind of mid-February, and we're now kind of consolidating right below this $3,400 zone, let's call it, for a key level of resistance. We did see a slow grind to the upside and then a little bit of a sell-off that did have a decent amount of sell pressure coming into the market, but we did get the low there to hold, so we have not really made a lower low in my eyes. We've been able to hold this low, so now we are coming from an uptrend to now a consolidation. Now the big question is, are we going to break above this $3,400 zone and continue the move to the upside, or we're actually going to fall and get a little bit of sell pressure coming into the market here? So my personal belief, I do want to wait a little bit. I do see this little zone right here, previous level of resistance, turning into new level of support, and I would like to see this break before I look for any real sell pressure, and obviously the $3,400 zone is going to be a key level of resistance for the price to break. So right now, we're in a little bit of a continuational potential high base pattern, which will then break the previous resistance at around 3,400 and then continue the move to the upside. And then on the weekly chart, we do see that, like we can see right here, we are at that all-time high that we hit back in February of 2020. So massive crawl back up from the hole that we were in kind of March, April. So pretty unbelievable. I did not think that we're going to get up to this point, but obviously the market has proven me wrong. So I was shorting kind of all around here, but after it broke below 29, $3,000, that was kind of for me a really big indication that we could be continuing the risk on environment, and we haven't really been risk off since. Yes, we did get a little bit of a sell-off and a little bit of worry throughout the zone, but we were able to hold above 3K, and the overall risk on sentiment did continue. So the overall approach I'm taking is, to be completely honest, the economy and the actual stock market is not really correlated. The overall economy is doing better than we were seeing in terms of the numbers and economic data, but obviously there's still a lot of worry, still a lot of fear, a lot of uncertainty, and recessions do not, they don't take only 2 months, they take, 2 years, 2.5 years. So it's not like it's going to be a complete, non-existent recession in my opinion, although the stock market does seem like it, but I'm being a little bit hesitant still on the fact that we're just going to absolutely break above the zone and continue to risk on momentum and overall direction. But overall, I do think it's going to have a higher probability of continuing to the upside than to the downside. So that's going to be S&P. We're now going to go into Bitcoin because that's going to be the main asset that we do like to look at for the overall markets. So in short, on the 6-hour time frame, we're at a very key level at around 11.5, 11.6 for a level of support. We've already had our symmetrical triangle squeeze that broke to the upside. This was the impulsive push. We're waiting for the pullback. This is the pullback. Now, it's not really getting that impulsive push that I would like to see carry the trend and carry the momentum to the upside, but as long as we're able to hold this level of support at around 11.5, as well as this confluence zone where you see this series of higher lows, as long as it's holding above this level right here, I'm looking at this market in more of a bullish viewpoint or perspective. Why is that? Well, just in a longer term time frame, we saw a very, very tight contraction in volatility, and then now we're expanding in volatility. And usually when we have these very tight contractions in volatility, we get quite the expansion in Bitcoin's price action, whichever way the momentum is going to go to. So we saw in October of 2018, we saw that huge sell-off that occurred, and then we saw in kind of March of 2019, we saw that huge expansion to the upside. So this, in my opinion, is another start of the expansion phase. This is just a continuation pattern for the next expansion to the upside. So I am viewing the market in a bull bias, basically. So in that said, we got a symmetrical triangle, break to the upside, pull back, validating the previous resistance as a new level of support. My overall direction and trajectory, I think, is going to be moving somewhere like this. So we got a strong push, and we got a failure to make a new high, and then we got a squeeze, impulsive push to the upside. This is a retesting the previous resistance as a new level of support, and I think the overall direction and movement is going to be towards the upside. And I don't know why this all did not close on me. This should have closed on me, but whatever. That's how life goes sometimes. Okay. Cool. So that is going to be BTC. That's going to be my view on it. So that means I'm going to be looking only for longs on all these alts that we're going to be looking at. So let's first look at VeChain. I think it looks pretty good. We got a nice squeeze. Let's get our thing right here. So we had a nice squeeze right here. You could also look at it as a horizontal zone. And I think we're seeing something similar as well. There we go. That actually worked this time. Something like that. So I'm going to be looking for something like that, break and retest of a horizontal zone. So let's just draw this in a little bit more clear here. We don't really need to take a step back because we already know we're looking for longs only, and we can see all the key zones within the 4-hour chart anyways. So just looking to see if we can identify any horizontal zones. That's going to be a zone. That's going to be a zone. The main zone I'm looking at is probably going to be this descending zone and the resistance zone that's also descending. So right around there. So that's going to be green because that's going to be a support zone. Less important, and then that top resistance is going to be that key zone that we want to see break in order for us to get a potential opportunity for a long. So let's go like this. Let's go like this. And there we go. And then we have a nice confluence zone where we see a previous level of support and resistance right around here. Not absolutely precise, but we see support, resistance, resistance, support, resistance. So that's going to be a key zone of confluence for potential level of both buy and sell pressure that we want to see break. So in short, what are we looking for? We're looking for a squeeze within the structure, which we already see. A break. If we do get a lower high here, we can move this horizontal zone a little bit lower, and then we're looking for a break and retest of this previous high, turning into a new level of support. That would be the best situation for us to find ourselves in for VeChain, in my personal belief. But right now, if we get a strong push up, that 0.02 zone is going to be a key level of resistance that I do want to see the price break before we look for any opportunities for longs. So that's going to be VeChain. We're going to quickly look at Dash, because Dash does look like it's holding a previous level of support right around here which was a previous level of resistance, which is acting as a new level of support. And then we do see a very nice squeeze here occurring, very well respected. I do like the structure here quite a bit on Dash paired with USDT. So that's going to be something that we are going to be looking at within the next couple of weeks here on the 4-hour, 1-hour, stuff like that. So knowing that this $85, $83 zone, let's say $85 zone is a very strong level of demand, and we see a nice squeeze with the series of lower highs squeezing closer to the strong level of demand, which is right here. We can even make that, no, we're not going to make that green. We'll just go like this and go here to here, and we can make this green just so it's a little bit more showcasing the fact that this is a strong level of support. But in short, this is a very easy structure to be looking for opportunities in, because you're looking for a zone of confluence to break and retest. Once that retest has been validated, you're looking for an opportunity. So ideally, you're looking for a little bit more contraction within the volatility. This might move down, might not. You might get something like this. And then once you see that price break, form that higher high and retest that previous resistance for a higher low, holding as a new support, that's going to be where you're going to be looking for an opportunity, somewhere maybe right here, somewhere where you see another squeeze appear. I don't exactly know, but that's going to be the type of structure we're looking for. So we're not looking for entry right here. We're looking for an entry after the completion of the contraction and volatility. And then we're looking for that first impulsive push to the upside, and then that retest, and you're looking to enter on that retest before the next impulsive push. So Dash does look pretty good, although it does look like it could use a little bit more contracting of the price action before we look to try to long here. Chainlink is going to be the next one. It's obviously been absolutely unbelievable in terms of the price movements to the upside, although there's a small little head and shoulders that does look like it has been completed here. So let's see where that target is going to be for the potential next zone. So it might be somewhere right here. Nothing really to go off of, and the next level of support is going to be right around there. So what we're going to be looking for is descending zones. Descending zones either in a horizontal, creating a descending triangle, or a descending, then this is a descending wedge. So what you're looking for is something along the lines of this. You're looking for contraction and price action, and then you're looking for the first expansion in the impulsive move, and you're looking for that pullback, validating the previous resistance as a new level of support, and that's that area that you want to be looking to potentially look to enter before you get the next impulsive push to continue the trend to the upside. So it's definitely really early. We can actually draw on it because this is the 4-hour chart. So when we go on the 2-hour, let's see what we're able to identify here. We do see some potentially respecting zones. And let's just go right here. And let's get the projection then there. So we do see somewhat of a potential zone. I don't want to classify this as a sure descending wedge because we don't really see our third validation. Once we get our third validation of a resistance, then we can classify it a little bit better with the descending wedge formation because we have 3 validations of the support. We got 1, 2, and 3, and you only got 2 validations of the resistance. I want to see 3 validations of the resistance. Then I'll be able to have a little bit more dependability within this price action structure. So that's what I see in Link right now, and like always, we're looking for a strong break and a retest of a significant level within a chart, where you're going to be looking for previous levels of resistance to be acting as new levels of support before you get your potential entry confirmation to continue the move to the upside. So that's going to be the overall structure for Link. Does look like it is setting up, but we do need a little bit more time before that actually comes into fruition, in my opinion. Zcash is looking very, very similar, so we do see a strong push to the upside. And if we go to, let's just do ZEC USDT, we can see it's a key level of resistance right around here that we were looking at, and then key level of resistance. So very strong level within the chart. That's really great to see. And let's go to the 2-hour and identify our horizontal level of our descending level of resistance, not horizontal. And then we'll get our projection. Like so. And that is what we're going to be doing here. And then we can even go like that. Like so. And we got ourselves in a little nice descending wedge, very similar to a lot of the different structures that we are looking at. So we're going to be playing this the exact same way like every other descending wedge formation, because we do need to have a dependable system that we use without limiting too many variables, or without having too many variables, I should say. So right now, it's definitely a lot of time before we're actually able to get any entry on here. I'd ideally like to see something like this, so then we can move this right here. And then you're going to have yourself a very well-respected key level of resistance, which is potentially going to act as a new level of support on the way up, where you're going to be looking for opportunities to long. So that's going to be ideally the place we're going to be looking for, although we don't have confirmation just yet for a third validation. So I view this as 1, I view this as 2, and I need to see one more somewhere around here in order for me to potentially look at this as a well-respected structure that I want to trade. So still, it's got a little bit to go before we can look for opportunities, but the rest of them do look pretty decent. Okay, so that's going to be my analysis on those. Let's quickly look at Ethereum. Oops, what happened there? Okay, so Ethereum did have a nice squeeze, which broke to the upside, failed to complete. Let's get the arrow. The final target, but you know, it got pretty close. So fortunately, we did not hit the target on this, but that's how life goes sometimes as a trader. And what you're looking for is a descending zone and a confluence area. Oh, excuse me, sorry about that. And let's just close this out because it's a little bit noisy. So let's get rid of this, and then let's jump to a smaller time frame and see if we can get a little squeeze out of this. Not really, unless we're wanting to go like this, which I don't know if I want to do. I don't think we're going to get a squeeze. That could be it, but let's go like this. I need to see one more rejection zone. Like that, and then we can put this horizontally. Oh, did not click. There we go. So what we're looking for, ideally, is let's get actually our snip because it's easier to draw using our snip. So what we're ideally looking for is initially we had this symmetrical triangle right here, and that gave the opportunity for price to run to the upside. Now this area right here where the apex is, where both the confluence zone of the ascending descending zone are kind of colliding, this is a strong level of demand. There's a lot of buy pressure potentially coming up here. So we know that there's currently a descending zone coming into a strong level of demand, right? So that is the current structure we see in terms of where the buyers and sellers are. So we know that there's lots of buyers, high probability of buyers around here, and we're getting sellers to squeeze the price. So right now, kind of looks like a little bit of a descending wedge formation. It's going to go deeper into the contraction of the price action. But what we're looking for is, like again, that expansion in volatility, that expansion in price action. So we see contraction right now. We're looking for that first expansion in volatility. So let's just copy and paste this guy. So come on, copy and paste this guy. And that's the current zone that we're looking to potentially have a break and retest. So let's get our price label. Around 419 would be the best confirmation, although like I said, we only see 1, 2. We want to see one more rejection at that zone, and then we're going to get our move to the upside that we're going to be looking to enter. So we only see 1, 2 rejections. We need one more rejection push the price back down to the level of support in order for us to use this as a potential opportunity to continue the momentum on Ethereum. So it's looking pretty decent, but we do need some stuff before it actually comes into a possible play for me at least. And then Binance Coin has not really been doing much. We can even take it back to the daily and then just close all this out because on a smaller time frame it just kind of turns into a little bit of noise. So we can go like this. And what are we looking for? Well, we're looking for continuation patterns, obviously, and strong level of resistance right here. We do have a series of higher lows on a large time frame, somewhere around there. So let's see if that's very well respected on multiple time frames, and it is. So I'm going to get my arrow and go here. And if we are looking for this ascending zone, looking at like 2850, but it's not perfect, so I don't absolutely love it. So what we would need to see for this zone is we would need to see the price one more time, break, and then move to the upside. We want to see that consolidation, right? We know this is a zone of sensitivity right here, but if this were to happen, you're probably going to see BTC move to the upside as well, and then alts are doing, on average, better than BTC right now for potential appreciation to the upside. So we need to see Bitcoin move up, in order for this to even become a possible play. If Bitcoin is moving up, if Ethereum is moving up, and if, let's say, the S&P is breaking the resistance and overall risk on sentiment is continuing to be risk on for the foreseeable future next week, then this could be a potential play that we could be looking at to long. So let's get the thing right here. All right, so that's going to be an analysis. Like I said, super significant high for BNB at around 26, but that could be where initially impulses up, pulls back, and then continues the momentum upwards. That would be a really good structure for us to be looking for. All right, and I think we're going to end off with the US dollar, and then we'll complete this crypto market update with a little bit of global macro in there as well. So let's go to the US dollar, because this is going to be a very important thing to be looking at for not just crypto, but for really assets across the board. So let's go to the daily chart. We already talked about this being a key level of resistance and this being a potential level of support. This is going to be a stronger level of resistance than this support. For one, we're making lower lows, so that's a little bit weaker for the buyers, and we're failing to make any higher highs, so it's kind of expansion pattern that way, which is a little bit more bearish, and you're not wanting expansions. Ideally, you're wanting contractions, so something like this, and you're looking for see a contraction and then impulsive push and a break to the upside. And we also know that there's a lot of demand right here at around 93, and if we are really looking back, we see this ascending zone right here. It's not perfect, but it is creating additional demand when you're looking at, let's say, the weekly chart. So let's take a step back. And if you're looking at it from the weekly chart, you can see we did pass it, but you could change this ascending zone a little bit to kind of form it to our current area. So we want to be sure that right now we're patiently waiting within this consolidation. Around 92 to 93 is where the current DXY horizontal channel is. If we start breaking to the upside, we could see dollar strength, so then risk on assets could take a little bit of a tumble. So we're talking about alts, Bitcoin, S&P, Russell 2000, NASDAQ, all those types of risk on assets probably will be moving down. If we're looking at FX, Australian dollar, New Zealand dollar, all that stuff will probably be moving down as well. And then obviously when the US dollar is going up, Japanese dollar is doing well, and you kind of want to be shorting very speculative things because the US dollar is a safe haven currency. A lot of people think that safe havens are only with gold and silver. Those are safe havens in times of monetary uncertainty, when there's a monetary superpower or a monetary power printing too much currency that's devaluing your native currency. So then you have to keep your capital somewhere, and that's where gold and silver would really play a major role. But right now, I don't think that point is there yet, where we're having complete, devaluation of currency, where people are not having confidence in the US dollar. I don't think we're at that point yet. For example, when there was high inflation in the 70s, it took basically a decade. The high inflation started in the late 60s, so we can actually take a look at it and look at the, let's just look here, long term, there we go, right here. So we can see the interest rates really did not start to really rise until kind of the mid 60s into kind of the late 60s is when things really started to take a pretty big tumble. And from that point, it was especially, like, you can kind of see like mid 70s, really you started seeing double digit effective federal funds rate or interest rates and double digit CPI numbers, so consumer price index numbers. And that's what's really going to be kind of hitting the consumer in the United States as well as normal countries, is the consumer price index number. It doesn't really matter if there's inflation in financial assets, that just is rich getting richer, but people start really revolting when food, gas, and everyday essentials start to increase in price, which can be seen by the consumer price index rising. So we can see back in historic time frames, it took over a decade for there to be any sort of major kind of inflationary worry in gold and silver, where yes, you did see since the 70s gold rise substantially. It's like the later half of the 3 years, or I guess 4 years, 74, 75, 76, 77. So I guess, 5 years from the mid 70s into 80 is when gold and silver really went exponential. But we saw inflation kind of rise up until that point. So I think we're seeing that right now, where we are seeing a little bit of inflation because there is substantial money printing. We do see the increase in the monetary supply as well, obviously, but we're not really seeing that consumer price index yet because obviously the pressure of the deflationary kind of decrease in the velocity of currency and all that stuff, the what's it called? Demographics also play into it as well, but I do think that kind of this time is coming. So the high inflation, the CPI numbers going up, you can't have zero interest rates and just print shit tons of money and the US dollar be completely fine forever. It can't happen, and the shift has to happen sooner or later. And if nothing happens on the fiscal monetary kind of side of things, where they're printing the same amount of money, they're not increasing interest rates, there will be a point where the economy is running too hot and they need to do something about that. And normally they would raise interest rates, which would make it more difficult for businesses to borrow money and gain credit, which would make it harder for businesses to grow, and that is not really great for the economy. So then the economy slows a little bit, and that's kind of how, taking away credit is going to lower the overall economic activity because people are unable to get credit when they initially would. Less business interactions, less investment in products, services, businesses, and that's not economically expansionary, let's say. So that's going to be a little bit of more of the global macro side of things. We did talk about the charts and what we see on weekly, daily, 4-hour, a little bit of a larger term time frame. So hopefully you enjoyed it. Hopefully you got some information on there. And if you do find this useful, if you do find this informative, educational, it would be great if you do hit that thumbs up and subscribe to our channel, so then we know that these videos do help people out there and we should continue making them. So thank you very much. Hopefully you had a good trading week, and hopefully you have a fantastic weekend ahead. Till next time, have a good one, everyone.